In this video, you're going to hear 5 funds that you can get invested for 2021 April, and they come from the sector of emerging markets. As we see a movement away from technology, we're all looking for areas of recovery, and emerging markets is a very natural choice because emerging markets, they are big in commodities, they are big in manufacturing, and I have 2 countries to specifically name. In this video, you're going to hear some ideas that are ETFs, that are passive investing, as well as actively managed funds. And when I disclose actively managed funds, I'll be looking in terms of their risk-adjusted returns. I'll be looking in terms of their performance against the index. Have they outperformed? And last but not least, I'll be comparing them among their peers. So if this topic interests you, continue watching on. Hi guys, welcome back. Now the first name that I'd like to pull out for you is actually from this country, Vietnam. Now if we see in terms of big picture, Vietnam is really a beneficiary of COVID-19 in a lot of ways. They've always been a good outsourcing manufacturer. If you have seen news, you do know that China is now no longer the cheapest place to manufacture. The cost has actually increased dramatically over the years. But countries such as Laos, Cambodia and Vietnam are key beneficiaries from China's growth, and they're actually getting some spillover in terms of manufacturing. And what COVID-19 has proven to many MNCs is if a lot of manufacturing is bottlenecked at China, there is certain risk in terms of disruption. That's why this spillover effect may take place even more, and countries like Vietnam again is going to be a key beneficiary. Of course, if you are in Singapore, you can actually buy Vietnam shares from some local brokerages. It's still a very small market, so I do believe it's much better if you are buying diversified, and that's why we're moving to this fund. But before we get there, let me show you some numbers in terms of Vietnam's COVID-19. You realize that it's pretty well handled, and that has led to a growth of 2.9% in terms of GDP for 2020. Wow, if you compare that to Singapore, to Malaysia, or most economies, you realize that that number is pretty fantastic, right? So to get involved in Vietnam, one fund to suggest to you is actually VNM, Vaneck Vectors Vietnam ETF. I've actually pulled up a 5-year chart for you to see. Very volatile, simply because it's a very small market. If we see in terms of performance-wise, they actually did crash very significantly in start of 2020. That's where the pandemic hit, but the recovery has been equally strong. In terms of the industry breakdown, there's a few names. The first is of course in real estate, biggest portion of things. Then food products manufacturing, electronics manufacturing, and textiles and apparels manufacturing. Banking sector only constitutes 6.2% of the index, and that is actually quite peculiar to me. In Singapore, banking is huge, but of course that's in Singapore. But I do believe in Malaysia, it's also much bigger than 6.2% of the index. And also when a market is small, typically it's inefficient. That's why active fund managers have every room to overweight on certain companies, and that would actually deliver returns over long term. And that's why we'll move on to the second fund of today. The second fund you can look to is actively managed fund investing to Vietnam equities. And just now I mentioned about active fund managers overweighting and underweighting companies to deliver performance. And LionGlobal Vietnam Fund has actually mentioned that they underweighted Vingroup and it contributed to performance. The 1-year performance for this fund has been pretty good, above the benchmark by more than 5.5%. If we look in terms of 5-year track record performance, outperforming a benchmark by about 4.5%. So these are good numbers. If we look in terms of the top 10 holdings for LionGlobal Vietnam Fund, you realize that Vinhomes is the biggest, but the second is actually Ho Pat Group. If you're from Vietnam, or if you have friends, family members from Vietnam, you probably know them very closely. They are one of the biggest companies there. And I want to deep dive specifically into Ho Pat Group because this company has been spectacular in terms of performance. 2020 was bad for most companies, but what right now you can see over here is Ho Pat Group, which is Vietnam-based and one of the biggest steel players there. They are a conglomerate with agriculture and real estate. You realize that Ho Pat Group has actually delivered returns of 41% increment in revenues for 2020. Profits were up 78% to 13.5 trillion Vietnamese dong. So Ho Pat's growth has been spectacular in a lot of ways. I went to do some research for you already, and over here I have something from Reuters itself. You realize that Ho Pat's group's revenue has been growing very aggressively, correct, over the last few years. That has translated to net income after taxes also massively growing. If you compare 2020 and 2016, that's almost doubling. So indeed, this is a fast-growing company, something seldom mentioned in mainstream media. Hopart Group's share price has skyrocketed from its base in April 2020 to currently is threefolded, and that has really been a reflection of its fantastic performance. Steel industry, if Vietnam is building a lot of buildings, high-rise, industrializing fast in anticipation of manufacturing, steel is a key beneficiary of things. That's why this LionGlobal Vietnam Fund having so much weightage in this company makes a lot of sense. From Vietnam to India, and that's where the third fund that I'd like to suggest you actually invest into. India has some use potentially in your total portfolio, and there are a few macro points working for it. The first is that India is going to have the world's biggest population in 20, if not 30 years time. The growth rate of population is big, way bigger than China, and many project that they will have the biggest domestic market in time to come. The second part is India is a key outsourcing place for the IT sector. I'm sure you're aware of that, which means when the IT sector starts to regrow again, you will see India benefiting also. And that's where we look at funds investing in India. And fund number 3 that I'd like to suggest to you today is actually INDA, iShares MSCI India ETF. This ETF has been around for quite long. It's one of the biggest ETFs investing in India. And the top holdings, let's examine. The first is actually in Reliance Industry. The second is actually in Housing Development Finance Corporation, HDFC. This is a company that I'll be touching on in a while, so do stay tuned for it. So let's look at performance-wise for INDA. On a 5-year chart, you realize that the performance has been strong. Of course, in January, February, March of 2020, it also plunged, as with all developing markets, but the recovery has been also very strong. The annualized return over the 5 years is 9%. So over the past 1 year, it's also been growing steadily, as with all recoveries in most equity markets. So if we look in terms of the industry allocation, you realize that IT services is the top at 16.6%, oil and gas is at 12.7%, and banks is at 11.7%. So that is a passive index, and if you're keen for an active fund manager to invest for you into India, I have names for you coming up. There are many actively managed funds investing into India, and I've actually curated a list for you to help you quickly understand what is available in the market. And let me pull it up for you to see. This is a summary of all the actively managed unit trust funds, and I've actually sorted them based on their 1-year performance. Of course, 1-year performance is not the only way you can sort which fund you should get invested into. And if you realize, fund number 4, which I'll touch on in quite a while, is actually Pinebridge India Equity. This is a recommended fund on iFAST FSM1. And you realize that they're actually not the top performer, but they've also got a pretty strong track record of things, and they have actually a good Sharpe ratio. The 5th fund that I'll be touching on with you today is actually UTI India Dynamic Equity, so stay on for it, because this fund has really outperformed the benchmark by quite a lot. And before I get there, again, inviting you to press on the subscribe, because it's taken our team quite a few hours to prepare all this material for you to quickly understand what are good ideas to consider for April 2021. So let's touch on the 4th fund today, which is Pinebridge India Equity Fund. This fund is actually run by portfolio manager Elizabeth Soon. I've actually featured one of her funds before, and that is actually this fund over here, which is Pinebridge Asia Small Cap Fund. So she actually run that fund pretty well. It's done 8.1% over a long period of time. So let's look at what she's done with Pinebridge India Equity Fund. This fund is 4-star Morningstar rated and is recommended on iFAST and FSM1. But having looked at it a bit closer, it seems that on the 3-year and 5-year perspective, they have not actually beaten the benchmark. And the further sign is, if I look at the Pinebridge Asia ex-Japan Small Cap Equity Fund, India's allocation is actually quite small. It's actually at 9.3%, underweighting the benchmark. So I'm not too sure whether she's favorable on India or not, and why iFAST and FSM1 has suggested it as a recommended allocation. But let's deep dive on this fund's allocations. The first is actually in terms of finance, they have underweighted versus the benchmark, 20.5% versus 27.3%. And they've actually overweighted into healthcare, 14.5% instead of 5.4% in the benchmark. That is actually active management. That is good. Take a stand. Whether it works out in a 1-year term time frame, we're not too sure about things. And the top holdings is actually Divi's Laboratories Limited. HDFC, which is a company which I'll cover with you in a while, is actually on the list on the top 10 holdings at 4.3% weightage. This is as of February 2021 fact sheet, the latest that I can find. I've actually dug up more information on the history of Pinebridge India Equity, and I've realized that Davies Laboratories was actually still among the top holdings back in December 2019. That's about 1.5 years ago, and they've maintained their stand, which is good. Overweight on healthcare, they believe eventually it will yield results. So I always like fund managers who take a stand. That is better than tracking the benchmark too closely. If not, might as well buy the benchmark, correct? The fifth fund today is actually UTI India Dynamic Equity Fund, and this fund is really interesting. And let's get started on the performance itself, because that is a really astounding find that I've discovered. The first thing to note is the dark blue line over there has outperformed massively the MSCI India, which is the light blue line, correct? In terms of a 1 year, they have delivered more than 5% excess returns. On a 3-year basis, more than 4.7% excess return per annum. On a 5-year basis, close to 4% excess returns per annum. So all these are fantastic numbers. And if we look Morningstar 5-star rated, this fund really seems to have things going. And let's look in terms of allocations, where they're putting their weightage towards. The light blue bar is the allocations for UTI India Dynamic Equity Fund. And you realize that financials, they have underweighted that. But they have overweighted in terms of IT and healthcare and consumer discretionary. Healthcare overweight also, very similar to Pinebridge India Equity Fund. Perhaps India healthcare does have some rooms to grow. And what I learned from COVID-19 is they produce a lot of drugs. Things like hydroxychloroquine, they are the world's biggest producer of things. So India does have a lot of pharmaceuticals. But the top allocation list of top 10, you would not see Davies Laboratories, which is something that Pinebridge India actually allocated massively towards. So they have different names to things, but ultimately they have been delivering results, and all that matters is coming from there. So that's a very nice fund that I would like to suggest to you. And I'll move on next to actually HDFC, which is this fund's top holding. HDFC is India's largest private bank by assets and is listed on NYSE. Look for a ticker HDB. In Singapore, HDB is Housing Development Board, but HDB right now refers to HDFC. If you look in terms of share price performance, fantastic, correct? So let's look a little bit as to what HDFC really is, and they're really big. Let me pull up some numbers from their financial statements. What you see over here, this as of ending December 2019. Net profits up by 32.8% to 74 billion rupees. Huge numbers, correct? What about deposits? Up by 25.2% to 10,674 billion rupees. India's government has been moving and incentivizing people to move their monies away from under the mattresses into the banking system. That's to weed out corruption. That's something that I came to understand also. And that's why deposits have to be growing, in the last 1 or 2 years. Net interest margin, that's where the bank makes money, 4.2% net interest margin. If you compare that to Singapore banks, which is about 1.8%, I've done before research on it, which I'll leave links below and towards the end of the video also. Now let's look in terms of the range of products that HDFC actually provides to India's markets. Retail banking and wholesale banking. And an interesting thing that I found out, loans against gold. I know, through Indian friends, Indian weddings have a lot of gold and jewelry. That's why that's a very localized service and it works. Wholesale banking, you can see every single segment, agricultural commodities included. So if we look in terms of where the profits are actually coming from, this chart really shows you things. There's a 10-year plotting of retail banking and wholesale banking again. If we believe that India is one day going to have the biggest consumer market in the world, then wholesale banking will definitely grow. And indeed, that looks to be the fastest growing. In any case, the biggest population, retail banking, will already mean in the dark blue bar below that India's biggest bank, HDFC, would stand to benefit in a lot of ways. Financial performance-wise, net profit has also been growing for the last 11 years, very consistent, correct? Earnings per share also growing very consistently. In fact, they've kind of four-folded their earnings per share from 2015 all the way to 2019. So this is indeed a very fast-growing bank. If you're keen to find out, again, the ticker I've mentioned before already. And since you're still to here, I have a bonus. I've mentioned before that I've covered before on Singapore banks. Singapore also has one of the best banks in the world. DBS is something that I like myself a lot. And I've actually done a deep dive on Singapore's biggest 3 banks. If you're keen to invest in Singapore banks, maybe this tutorial will help you a thing or two, and I'll invite you there also. With that, I'll sign off. Take care and goodbye.